The U.S. housing market is another part of the economy that is not recovering. Data yesterday made that clear, showing home prices fell to an 8-year low in March. In many markets around the country, the housing market has already taken a double dip, with prices dropping below their lowest points during the mortgage and credit crisis. That's the situation in Minneapolis, where prices are down 10% from a year ago. Brad Fisher is the president of the Minneapolis Area Association of Realtors. He's with us live from Minneapolis this morning. Brad, people are used to hearing about markets like Phoenix, for example, or Tampa as the worst in the country, but on a year-over-year basis, no market has suffered more than Minneapolis. Why? What's peculiar to your market that we aren't seeing in some of the other major metropolitan centers around the country?
Well, Eric, I think there's a couple of reasons that we're affected a little bit more. And one, it may seem kind of arbitrary, but our weather this year has been extremely difficult this winter. Unusually high snowfall, which does definitely affect us. We are a seasonal business. The other factor is we were affected more by the tax credit. That meaning that a year ago, we saw sales rise quite dramatically in the spring season. And so in comparison, this year, our numbers are off from that number. And our buyers that are in the market today are shopping more for value. They're looking more at the low end, and they're not looking in the middle and upper brackets as much.
Brad, to what degree, in your opinion, are the banks to blame? We hear from housing industry advocates, for example, consumer advocates, that the banks aren't modifying enough mortgages, and some people in the real estate business say that they're dumping too many foreclosed houses on the real estate market. Do you find that to be the case in Minneapolis?
I would say, Eric, if anything, probably the clog in the system right now is our short sales. We have an extraordinary amount of inventory in that category, and that category can ultimately end up in foreclosure. But currently that inventory is not turning as fast as it would because the banks are not working as efficiently as they could to solve that problem to get those houses turned and sold.
Now, what about the outlook? There is talk that this double dip is going to continue, not just in markets like Minneapolis, but some of the others that I mentioned, and perhaps even some of the more resilient markets around the country. And there are a couple of headwinds. You talked about the tax credit issue. Mortgage rates have been rising, for example. The economy is losing some momentum. How does it feel from your perspective? Have we hit bottom yet, or have we got further to drop?
Well, I would like to believe that we have hit the bottom. I think the key is, going back to the tax credit, is we're now apples to apples as far as from May 1st on. We're looking at numbers without a tax credit support. And so as we go forward, the consumer really has to feel confident that we're not going to see a drop in the units as far as in values. But I just think that once we get a couple months underneath our belt and we see where our numbers are, and so far in May, our numbers here in Minneapolis have picked up 40% for the week of May 21st, and we were up 15% the week before. So once we see that resurgence of demand over the previous year, I think the consumer will feel much better, which obviously it's all supply and demand, and that should help us come back out of this.
Brad, very quickly before we go, if there's one thing that could really be a catalyst for your housing market, what would it be?
I think it's consumer confidence and unemployment.
All right.
Absolutely. I think we need the consumer to feel confident.
Well, and lots of things have to happen before that comes around, including more jobs.
Absolutely.
We may see evidence of that later this week. Brad, thanks very much. Brad Fisher, president of the Minneapolis Area Association of Realtors here on the Inside Track this morning.